Why is Applied Digital up 90% in the last 6 months? Why did I buy it back in January 17th through March 22nd last year? Why did I buy that stock? Well, it all started when I heard Jensen Huang, the CEO of NVIDIA, make a statement back in, I guess it must have been in January, that he had put together some partners, and he put it in a press release, and listed in there was Applied Digital. So I went and looked it up to find out what it was, and here's a picture of the data centers that they have in North Dakota. At the time, they had 3 data centers, 3 complexes, 2 in North Dakota and 1 in Texas. They subsequently sold the one in Texas to one of their biggest renters. Their renters were basically crypto miners with some data centers towards big data, but mostly it was crypto. So their lead tenant in Texas said they would buy the data center, and so they took that money and took it up to North Dakota. And here's a picture of one of the data centers in North Dakota. And when I first looked at it, I said that looks like storage units, not a data center, not like what we have up in Huntsville here, owned by Meta. I said, that's not. And then I looked a little closer, and I looked in the background. You see that in the background? Those are wind turbines. And so I got some information, and I went to their latest earnings call, and I met Wes Cummins. Wes is, as you can see, a young guy. He's aggressive. He's a good presenter. And I listened to the earnings call, and he started talking about their financial arrangements with the Bank of North Dakota. And I thought, wow, okay. They're in North Dakota, and I've been to North Dakota. I used to cover it for Polaroid, and it's desolate. And you don't want to go there after January the 1st through spring. But anyway, he explained that electricity was relatively cheap in North Dakota, and then they they augmented that with the turbines, and the turbines were actually in both of the North Dakota data centers. So I said, this guy's thinking ahead, and Jensen believes in him. They explained that they had some difficulties in February, that they got the GPUs, but they didn't get the infinity bands. And the infinity bands are what you connect the servers together rather than an infranet cord. It's an infinity band. And looking that up, I found who the major manufacturer of infinity bands were, got their name, looked into them. They were actually owned by NVIDIA. So I said to myself, well, if Jensen sold him the GPUs, he's going to see to it that he gets the infinity bands. So I went ahead and bought it. As it was, the price came down, so I bought some more in March. I'm up to about 4,500 shares. I thought I was going to sell it about a month ago, and I put a stop loss order on it, and it didn't kick in. In fact, it's just continued to go up. So I left my stop loss order on at 10%, and it just keeps going up. So what I want to share with you here is this on paper is if I had to compare it to something in the grocery store, this would be a banana that was brown, okay? And you just say, don't want that one, don't want that one. And let me show you why I say that. This is a picture from my cheat sheet. And what I've added on the cheat sheet for those who have access to it through our Platinum program, no, I guess it's through our Premium program as well, I give you all the financial statistics so that you can compare it to other stocks, such as its asset turnover ratio is 32x. So what that means is if you give it a dollar, it has the potential to turn that into $32 of revenue. Is that good, bad, or indifferent? Well, if you compare it, AEHR is 59. Stillwater or Skywater is 110. Twist is 99, and Ultra Clean is 94. So is it good? Well, not really, and it's only one it's better than is Navitas. So it's not a good metric. In fact, Apple's is I think up somewhere around a 136. So that would tell you no, don't think so. So then you look at the return on assets. That means if they have $1 million worth of assets, they're going to lose 19.7%. Return on equity. Well, that means if they have assets of 1 million and liabilities of another 50,000, they're going to lose 166%. So what you're getting, the idea is this company doesn't make any money, and it doesn't look like it is anytime in the near future. Return on capital, a negative 14%. Gross margins. This is after they sell their data source or their data processing power, they lose 10%. And their net margins, that is, after they pay their expenses, they lose 90%. So do you see why I say this is not even a brown banana, this is a black banana in the grocery store. But what did I see that made me buy it? The confidence of Jensen Huang. That's what it came down to. Here is a guy who stumbled into the biggest change in our world as Sam Altman figured out how to use extreme compute to create models that learned from all the data in the world to put it in a position that you and I can access it. And this is going to change the world that we know as we know it in every aspect. If you watch some of my other videos, you'll know this is going to create deflation. This is going to make it necessary to have a universal wage because nobody will be working other than the data centers. So that's why I bought it. So then what you'll see is over here, I go into, okay, what does Wall Street think of it? Well, Wall Street believes within the year that it's going to go to $12.43. It's today at $18.18. So that's about another 50%. Okay, I believe it'll end the year at about $9. It's at $8.18. I believe at the end of 2025, it'll be at $11.16, and I believe that at the end of 2026, it'll be at $21. Again, it's at 8, so that's almost a 3x. Why? It'll turn profitable. It'll turn profitable somewhere in late 2025, and what you need to know is if there is a shortage of anything in this world in the near future, it's going to be data centers and it's going to be electricity. And here is a guy, he's sitting in North Dakota. It looks like he's got plenty of land to expand into. There's no near cities, and he's got wind turbines, and he's got a Bank of North Dakota that's behind him. He has, on numerous cases, he has in the data in the earnings calls that I attend, he has told me he is working with some of the biggest the biggest people in the industry, and that means Microsoft, Amazon, and Google. And he's got a very bright future, and he's young and he's aggressive. And I've gotten to know him. I mean, I'm not like, hey, how you doing? I listen to his earnings calls, and I really want to share with you. If you aren't listening to these earnings calls, you're not really an investor. You're a player. And players get beat. They get beat regularly. And without the access to this kind of data, if you don't know what a asset turnover ratio is and how your stock compares to other stocks, and if you don't know what return on equity, how that differs from return on assets, you aren't really an investor. You're a player, and you're going to get beat. So if you don't have access to that information, I'll give it to you. You just come to to my website. Will I charge you for it? You damn betcha I will. Because I run a business and you run a business. That is, if you're an investor, you invest money in companies that make money. Well, first of all, you got to figure out who are the ones that make money. And if you looked at Applied Digital on the surface, you would say, hell no. That's a rotten banana. It's just waiting to be thrown in the trash. But if you go deeper, if you go to the earnings calls, or you subscribe somebody like me who has the time, who's retired, who enjoys doing this, then you stand a chance. But if you don't, get out of it, because the professionals are good.